Hi, I'm Boyd Pederson. I'm the founder of Bigstone and ex-CEO. I'm joined on the panel today by an esteemed group of colleagues. I think what we'll do to start off with is just go from Alex down to the end and have you guys introduce yourself.
Alex Molloy from Valiant Finance. We're a platform that helps small businesses find lending options in the market. So we are actually an SME finance intermediary. We've been operating for over 2 years now, working with the bank and non-bank space across every different type of product that a small business could want. So we're really looking forward to this discussion.
Peter White. This is heading into my 40th year in banking and finance, and I head the industry body looking after mortgage brokers and finance brokers across country.
Michael Burke. I'm head of sales with OnDeck. I'm 20 years in financial services. Prior to OnDeck, I was with GE Capital for 14 years and spent a period of time at Flexi Group as well.
Well, we've heard today about brokers' role and the evolution of the financial services industry earlier today with some of the folks who actually started the brokerage industry in the mortgage space. And this panel, of course, is about the future of SME brokers and intermediaries. We know that finance is complicated and even more complicated in the small business space, and brokers have a real critical role in managing and reducing search costs. Maybe each of you could riff on your perspective on how the role of brokers will change given all the massive changes we've talked about today, whether it be technology, internet, data, consumer banking, open banking, etc.
From our perspective, we think one of the biggest challenges for brokers trying to operate in the SME space is making the advice model scalable down to the micro end of the market. It makes sense for a high-skill finance professional like a broker to be writing $1 million home loan facility. They can make that work for them, but trying to be across 50, 60 different lending products in the SME space and trying to make a $50,000 loan work for them in terms of giving the customer the time to investigate their financial situation, the time to be trained across that incredible breadth of products is a real challenge. And they're going to need to start to increasingly lean on technology that's already available in the residential mortgage space to be able to search and canvas that territory of SME lending and start to get increasing and better training in the idiosyncrasies of SME lending versus the residential space that they're more comfortable with.
Peter?
Yeah, there's certainly some interesting moves happening there. In the residential space, obviously the brokers are making very strong inroads. And into the small business lending area, the traction hasn't been as quick. And this was surveyed last year by a group, and I think the penetration rate was down around the mid 30% mark, significantly less than what's happening in the residential space, which is up around 57% of all mortgages originated through broking. And a part of the conversations I had last year, and I think it's still relevant today, for brokers to really work closer with SME lending, they've actually got to understand the client's businesses a lot better. And this is where I see some interesting overlaps in the fintech space as to what could happen in the SME sector. I think for the average small business person, a facility that's unsecured and not connected to the residential house is something that fintech space will take some huge leaps forwards in. When you've got to have it connected to a mortgage for some reason, so it's a more integrated facility, there's a lot more challenges. The banks quite often have got people tied up in all money's mortgages, which basically means that they've got their house on tap and even their credit card, even though that's unsecured debt, is still connected through an all money's mortgage as well. So when you've got that sort of interplay, that's where the broker space, I think, has more, I won't say relevance isn't the right word, but has a greater touch point because it needs that interaction to understand everything a lot closer. But being able to go online, use the fintech space to get 50 grand to iron out an overdraft or to take up a short-term facility or whatever the need may be, I think is highly relevant. And I think as we progress over the coming years, those take-ups will just continue to rapidly increase.
And your perspective on the role of brokers in the future?
Yeah, look, I think Alex makes a very good point in relation to it's got to be economically viable for a broker to participate on those transactions sub $100,000. And for it to be economically viable, going along and speaking to accountants, speaking to customers multiple times, it's not a process of making commission. You've actually got to minimise the cost to make a transaction a viable transaction. I think certainly the feedback we get from brokers from an OnDeck perspective is the value proposition really resonates with them because Our credit requirement is that up to 150,000, we only require 3 months' worth of bank statements. How are we able to do that? We've got the benefit of having a parent that's funded $8 billion in this space globally. So we're very fortunate. But from a broker's perspective, it's really valuable dealing with a financier that only requires 3 months' worth of bank statements, and therefore the touch time that they're involved in the transactions quite minimal. Interestingly, if I think about the landscape of brokers, and as I said, I've been in this space essentially for the last 20 years, and it's changed drastically, and probably even more so in the last 2 years, where we've actually seen you've got really brokers that are quite polarised. You've got traditional brokers, which essentially they're originating transactions predominantly through a referral network or through their existing databases. But at the other end of the spectrum, you've got brokers who are quite tech savvy. They're involved in, if you like, originating transactions through a lot of digital means, EDM activity. And then you've got brokers that kind of sit in the middle of those two spectrums that are actually playing across both or looking to transition themselves from actually originating transactions from out of that core lead gen space now into a more digital / tech savvy space.
If I can just add that, yeah, it actually even gets really complicated because we can see it within the membership structures, and we tend to have an older demographic as a membership member, and you find that that we're encouraging all brokers to increase their technology capabilities to be able to deal in the space, because a lot of them, surprisingly enough, we've got members that don't even have a bloody email address. So you go through some interesting extremes of where this lies. But the reality is it's such a great value add to a broker who's sitting face to face with a client who is a business person that has access to this style of product. So I'd say, great, you need 100 grand, I can do that for you. I won't say now, but pretty much we can work that out straight away, in addition to whilst we're sorting out other things.
Yep.
And quite often a lot of small businesses, and I've been involved in several of my own and still am, you want to unbundle some of those things that banks have got you tied up in the world as well. So quite often it's a good strategy to say, okay, well, I'm going to piece the home off and put it there, and that overdraft I've got with the bank, well, I can unshackle that and put that over there completely separate and divorce the two. Because if I want to sell something, I don't have to pay out everything.
I think all three of you have mentioned, and so did Mark Boris earlier today, the fact that banks and others who are facing compliance and a whole raft of new regulation are pushing that down into the aggregator space, and clearly that will also push into the broker space as a direct result of that. Do you see that happening in the SME space as much as it's happening, as Mark made reference to earlier today?
Yeah, I think that there's going to be increasing pressure at an ethical level in working with partnerships, even if it never bubbles up necessarily to actual regulation, to start to hold everyone to a higher standard in regards to that kind of customer inquiry and transparency. And that's only going to be for the better. And it's going to be the role, in the same way that technology on the residential mortgage side is making sure that we standardise the way in which we investigate someone's circumstances, the questions we ask and the inquiries we make. That's going to start to occur on the SME side as well. And there's going to be a rightful sort of question, are you taking a different approach to SME in terms of putting product options in front of a customer to how you're expected to behave in the residential space? And if so, why is that the case? Because there are already elements of the regulatory environment in Australia in financial services regulation where SMEs are treated the same as consumers. And credit is carved out of that for some reason. So I think that there'll be a regulator coming top down saying, well, why should we treat SMEs who are just mum and pop people anyway any different for their business lending than we do for their retail? And at a commercial level, high quality partners like banks and institutions, Forex companies are going to be saying, I expect you to treat my customers with respect and to do proper investigations into their circumstances. So there's going to be this all-round pressure to just raise the bar.
You're talking about banks, right? Raise the bar. Sorry. With the regulatory piece, I sat on the consultation committees with Treasury, bringing the NCCP in background 2008, 2010. We fought bitterly to keep small business lending away from NCCP obligations, and that still stands today. I can tell you right now, I still sit on those government committees, both to ASIC and to Treasury, and SME lending is not on the table to be brought under NCC-style regulations. The only provisioning outside of that was with the mum and dad, where they used their residential property to actually secure a business debt. And the principle that underlines the NCCP was around, there's couple of pillars, more than that, but in general, a couple of pillars. It's got to protect mum and dad, got to protect the family home. So if you had a small business person, it was basically mum and dad, and they were using the family home, that got caught in direct lending, so mortgage-style lending in that respect. And I don't see that, that regulation will extend past that. It's too complex. We have enough issues, no disrespect to the bankers here today, but with lending to small businesses through the banking system as is at the moment. I was fortunate to speak with our Prime Minister last year around that and the caps that were put on interest-only lending and restrictions of appropriate style debt to some small businesses. And I think we've got to be very careful and make sure we keep that to one side. We can't stifle the growth of small business in this country.
To be honest with you, my view is probably fairly simple on this, and I don't know if Helen Gordon is still here, but I'd certainly I'd leverage what she said. I think she put it succinctly, perfectly, her choice of words. It's about transparency and fairness, and ultimately I think as financiers, if we're operating with that mindset when we're dealing with customers, when we're dealing with brokers, I think you're on the pathway to the the optimal outcome, and I think it's as simple as that. It is about fairness and it's about transparency.
Yeah, the NCCP brought in a huge amount of transparency in the broker marketplace, and the whole thing revolves around trust, and whether it's the trust of the client or whether it's the trust of the lender. But you don't get to that trust unless you can tell the truth. That truth's got to come through that transparency piece. So I always talk about that transparency, which brings you the truth. That truth is exposed. That brings you the trust. That's the trust of the client and the lender.
Yeah, that kind of brings a couple of themes that come together. So we've talked a little bit, or at least others have, and you guys have mentioned as well, as technology plays a bigger role in intermediation, whether it be broker-led or accountant-led or others. Clearly the capital needs of the intermediary industry is going to change. It'll become much more capital intensive. But that also then brings standardization and trust. So as you talked about trust and standardization, we've seen in the last few weeks quite a bit of news about the Productivity Commission, ASIC report, the Royal Commission on compensation. How is those things all going to play together with platforms becoming much more important to the industry? And then standardization of compensation possibly occurring at the mortgage end side of things.
Yeah, I mean, we think that the scrutiny that's occurring in that space, and both on the residential side and the SME side, will hopefully just lead to industry participants pushing towards that kind of standardization. I think back to the point of transparency and fairness, running a business where you want that to be the case because you want to run that kind of business and you want those to be your values. If you can get yourself into a position where there's no agency problem with your brokers and your team members because they're removed from how much commission the organisation is going to be earning through playing the intermediary role, and to the extent that they're aware of it, it's the same across everyone, then that leads you to a really strong position in terms of being able to have a strong values base for transparency and fairness. So it's certainly something that sits at the core of the values we're trying to build for our platform. And also it's something that we're striving for, and we've seen the industry start to gravitate towards as time's progressed and the industry's matured.
I think one of the fortunate positions we're in, these are not uncharted waters for us, because as we heard from Noah Breslow this morning when he spoke about in the US and in the UK, in the US they've got smart box around transparency, and I think we can take feedback from other jurisdictions around how the marketplace has embraced or taken on those transparent approaches within the broader market. So we can look broader, we can look elsewhere to get feedback on what works well in the marketplace, because I think they certainly exist.
There's been a couple of questions about agency issues and standardization of the commission that have come through. And maybe, Peter, you'd like to address one about isn't up there now, but it talked about how do brokers deal with the fact that they get differential commission amongst providers, and whether that should change at all.
Well, again, that transparency piece is very strong in the broker sector. It's a compliance obligation under the NCCP, and credit disclosure documentation they've got to provide. And commissions are pretty standard in the home loan sector, and I know it's divorcing a little bit from the SME component, but there's a bit of an overlap. So, there's less than a cup of coffee in it somewhere. There used to be a period of time, going back some years, where it was more diverse than that, and in recent past, even in the vertical integrated products with white labelled products and so on, were not as balanced as they should be. That's all now taken care of as a part of history. And I would strongly suggest that needs to play out in the SME marketplace too. I think that standardisation model, if it could be achieved with SME lenders in regards to commissions and how they should look, it's played out in the motor sector recently with banning of flex commissions. Well, it's not quite banning it. Car dealers can't dial up the interest rate to get higher commissions versus being able to pull it down by reducing their commission. So that's a play that's very similar to the home loan market. The lender sets the rate, the commission's in the rate. That's the way it goes. And I think that helps to play out that transparency piece. But, the transparency is there. What it does stop is inappropriate influence. So this lender says, well, I'm going to give you another 20, 50 basis points more than the other guy to try and influence and buy the business. That, to me, becomes a bigger issue. We need to remove that so there isn't any influence of buying and potentially putting people's considerations at risk by way of an income versus the most appropriate outcome for the borrower.
So maybe we'll move to a couple of the questions that have been rated. The one that's been rated so far is, what are the panel's thoughts on comments regarding the future of aggregators in particular?
I don't see the aggregator market changing anywhere soon. It's evolving. There's a lot more tech coming out to drive both the existing aggregators and new aggregators of the future. The aggregators need to, in my mind, make sure they keep their relevance, and they do. They provide a lot of training. They provide support for the brokers. You see some of the comments that come out of the Royal Commission, and particularly out of the Productivity Commissioner, where, especially in the PC, they don't really understand the marketplace that well. You kind of think they did a Google search, said, "Oh, this sounds good," and here's a document. It's quite questionable, some of the facts that come out, or some of their findings that come out of that, which are slowly being ironed out. But the aggregators play a very, very important part, and it's up to them, I guess, to make sure that they adapt with the changes in the future as much as anyone else.
Yeah, I think it's a really great point around the services that the aggregators are providing, because it's become more and more clear with time to me that the aggregators are trying to evolve their service models to keep up with the pace of industry. And the really, I think, forward-looking aggregators have realised that technology's got to be a core part of that service offering. And that really flows top-down from the need for compliance, because the aggregator holds the license and is responsible for the compliance of the brokers in their network. And the technology tools in the CRM that's being used by the brokers is the core compliance tool by which they track all of the activity that the brokers are undertaking with the customers. So if you can be continually improving that technology tool, both in the residential space, but increasingly as well, in line with our topic, to expand it into the SME space, then you'll start to differentiate from your competitors in the aggregator space.
I completely agree. I think the value that aggregators bring to the market's certainly significant. I think probably specifically from a compliance perspective, from an education perspective, but from a financier's view, the other aspect that we really like is the accreditation process. We set a very high watermark at OnDeck as far as the partners we deal with. We go through rigorous accreditation processes. The thing we like about the aggregators is they have similar high watermarks with the accreditation processes they have within their organisations to choose the members that they're prepared to bring on their panels. So we take a lot of comfort out of that. And in fact, dare I say, their watermark's probably slightly higher than ours, but it's a real important value add from a funder's perspective, because clearly you want to be dealing with the right partners. So knowing they go through that rigorous process, we really take a lot of comfort out of that.
All right. So there's the last question there, I think, at the bottom of the list there is for you, Peter. How do brokers, and perhaps you as well, Alex, manage the overexposure of lenders and make sure that there's enough shopping or perhaps preventing overshopping of their clients to result in best client satisfaction?
Yeah, on that last question, technology drives it. So, the brokers will always give their clients a selection of half a dozen lenders, if there's half a dozen lenders that are appropriate for their needs. So that piece is then brought to them. You've got to remember too that brokers are driven by predominantly, and I hate coming back to it because I know it's not really the subject, but the NCCP, the National Consumer Credit Protection Code, their actions are all being formed around this. And so, you know, that piece of that they are applying to is providing credit assistance. Mortgage brokers do not give advice. By law and their actions, they give credit assistance. So they use technology to drive the options that are available to them. So regardless of what sort of loan it is, that technology drives those options based on a sequence of Q&As and is presented to the borrower to assist them to make a decision to then progress through the lender's platform for credit processing and take to settlement, which then addresses the other question that was there about conflict of interest. I think we get a little bit distracted with conflict of interest, and it's actually not that complicated a situation. I mean, there's disclosure pieces in place, but the worst thing is that if you walk into your lender today, and this question was brought up by the Productivity Commissioner when I sat in front of him about a month ago, and you know, the reality is at the end of the day, the greatest conflict of interest sits in the bank. They can't tell you that the bank next door has a 10 times more superior product than what they're going to offer you, but they're going to offer it to you as if it was the best product in the planet. And yeah, that's nothing against the banks, so don't get me wrong. I cut my teeth in the 70s in banking, so I love them dearly. But there's a reality of life. Yeah, that is probably the most conflicted position of all. And we all have a position of conflict. The bank employee has a conflict of interest in that the better the job they do, the more likelihood of a promotion they'll get, which more likelihood means they'll earn more money, more income. It's all self-centred. So anyhow, the broker uses technology to try and overcome all these things and present something that is open there in the best interest of the borrower. And the best interest test is something that's obviously under a lot of discussion at the moment at the Royal Commission and Productivity Commissioner, to ensure that there are appropriate products that's in front of clients and guide them through that process to achieve what is not or what is an appropriate result for the borrower for their circumstances as you know them now. You can't predict what's going to happen in the future. You could try, but it's always a situation today.
So Peter, you've said that you know, the compensation should be standardized, and you've said that the role of the broker is not to give advice, but to present the choices which the technology presents directly to the broker. So if the broker's not adding value to that, what value should they be adding?
Oh, they are adding value to that though, but it's a service standard. If we go back, into the early 90s, now you mentioned you had Mark Boris. I was Mark Boris's first CEO back in the 90s when he made his foray into Wizard Home Loans. An interesting time for another story, another place. We'll go on from that. Yeah, the reality there is that the brokers add serious value by way of the service standards they provide. In the mid-90s, banks were shutting bank branches all around this country, and the brokers are the ones that stepped up and placed, oh, we'll come and see your home at your time. You tell me when it's convenient to you. So there's a service delivery standard that's provided there. And in the 80s, and I was writing home loans in the 80s in major banks at 18.5%, those service standards certainly weren't there. It was a dictatorship. I was a part of it. I know it, knew it well. So you've got those value propositions that brokers are delivering, but also two, a part of the broker capability is the aggregator, and the aggregator is the ability to use the technology to find the choices that are not inappropriate for that borrower, and then to guide a borrower through the process. I always define it as being a bit of a parallel to being an owner-builder. I would be the worst owner-builder. Right? My house had collapsed in 2 seconds. I got no idea. I can't even hammer a friggin' nail into a wall. It's so when you go to get a home loan or you get a business loan, it's the same sort of thing. It's not your area of expertise. You need someone to guide it. Some people do it really well, don't need that area of expertise. That's why in home loan lending, 57% of people are using brokers. Right? So not everybody needs them, but they're there for those that do want to guide them through that process.
How do you think that should evolve given all the technology changes we've been talking about? Maybe you can start with that, Alex.
I think sort of thinking about the SME space a little bit differently than the NCCP space, we're a little bit more proactive about advising clients. Sitting outside of NCCP, we don't feel the same restrictions around pretty proactively saying to very time-poor SME owners who really don't want to necessarily mentally engage with the difference between a chattel mortgage and an operating lease, what we think the best option for them is. And I think part of that is the luxury that in the SME space, products are more drastically different than they are in the residential space. So you can get someone across it pretty quickly and say, look, I think here are two options and here's the best one for you. That said, I think that the technology evolution there is about trying to achieve the same thing that's been achieved in the residential space. The residential mortgage market is years ahead of the SME space in actually being able to canvass the whole market. You know, our challenge and mission is to try and do the same thing with a much, much greater breadth of products, much, much greater breadth of lenders and policies. And if we can get to the same level of transparency that's been achieved in the residential market and SME, we'll say we've achieved our mission.
Well, thank you. I think we're already over time, so we'll have to leave it there.